Today is Tuesday, February 5th, and we are going to go ahead and move our stop up one more time here on the RHT stock trade. And I want to go through one trade yesterday in Apple, a good day trade. But first, let me just update you on this. Okay, yesterday the market created the inside bar, right? Lower high than the prior bar's high, and the low rather was higher than the prior bar's low. So we're starting to coil up a little bit here, even though the inside bar was a rather larger bar than normal when you see an inside bar. But what I want to do on this is I want to move up that stop even further. I'm going to go ahead right now and move that stop up to below yesterday's low. Yesterday's low, remember, our trailing stop yesterday, we moved it up to 55.68, which was 10 pennies below Friday's low of 55.78. So I look at that. Yesterday's low is 55.91. I'm going up to 55.81. 10 pennies below it. 55.81, and then I'll be out of this trade. 55.81. Look at the market just touched 55.91. So we just touched yesterday's low to the penny, right? 55.91 was yesterday's low, and today's low just nailed 55.91. Again, I'm just going to go 10 pennies below that at 55.81, which is right there, locking in $2.53 per share on this trade. If you recall, we bought this market down here at 53.28. I originally wanted to go long this stock at 52.80. The market never pulled back on the 23rd, so in the morning I decided just to get long, thinking that the market wasn't going to pull back to my target of 52.80. So again, I got long at 53.28. So not a bad trade. Again, a swing trade based solely on the daily bars. Again, bought it there. Market ran up, took some profits off here, started trailing up that stop. And right in here is where we are now. Again, that trailing stop is 55.81, locking in $2.53 per share on this trade. All right, let's go quickly over to an Apple chart. And I want to show you one good day trade yesterday. All right, I want to show you one good trade in Apple. It was a day trade. Friday closed right here on Apple, right? Opened up yesterday, ran up on the first 3-minute bar, kind of ran up, took out the 200-day exponential, but could not sustain that. Look at the second bar. Second bar completely reversed, closed near the low here. What I was specifically looking for is two things. I was looking for the market to come down to take out this low, which I deem a rather significant low for day trading that was put in place on Friday afternoon. And that was a rather significant low. It wasn't the low of Friday, but it was a low before the close. So since the market did open up higher, put in the ultimate high right here, and then completely reversed, back down through the 200. You see this this hot pink? That's a 50 exponential moving average. The market continued to move lower. As soon as the market penetrated down through that low I was keying in on, came down, hit this low here. At that point, the market had completely reversed. The market had been open about 50 minutes at that time, dropped below the gray action zone and the blue action zone while taking out this low and completely reversing down through both the 200 exponential and the 50 exponential. It was at that point when the market started to rally up off that low that I knew I wanted to be short the market. So at that point, I took my Fibonacci tool right on TradeStation, click it up here, put it on the high, dragged it down to the low, and I'm looking at the fib levels in conjunction with the blue and the gray action zone, okay? So the 38.2% retracement of that downswing right here, that was the short, okay? The short was 451.80, 451.80 with an initial stop loss. Look at the daily pivot right up in here, 453.86. I want to go right above it, so actually I went 454.01 was the initial stop loss. So 450 404 was the initial stop loss, selling the market at 451. So the initial risk on this was $2.21. All right, so again, the entry here was at the 38.2% retracement at 451.80 with an initial stop 454.01, risking $2.21. My first profit objective on this trade was the actual low that the market rallied up off of. This low. This low was 449.25. That was the first objective. So that was good for $2.55. That was a portion of my position. 70% of the position was taken off at a $2.55 profit. The remaining portion of the position was trailed to the downside and ended up taking profits right in here. About 446, right where I'm scribbling. That's where I was stopped out, right in here. So not a bad trade. So usually in any market, you usually get a good run sometime in the morning, and I look to capture that, and I'm usually done. So, I mean, my main market, as most of you already know, is the E-mini S&P 500. But this set up just so beautifully yesterday that it was hard to pass up. So again, that was the trade setup. As soon as the market was able to take out the low from Friday here, after completely reversing down through the 200 and the 50 exponential, right? Obviously the bars turned red, the trend was down obviously, so I was waiting for a logical pullback into a resistance level, and that happened right in here with an initial stop loss beyond, right, above logical resistance, looking to take profits on at the low and then trail it down. All right, hope that helps. Have a profitable day. I'll talk to you tomorrow. Bye for now.